Apple stock forecast and price prediction. The Apple stock forecast is $190, with a high price target of $215 and a low one of $145. The stock forecast is made by 37 analysts, providing projections for the next 12 months. According to the estimates, Apple is a buy with a profit margin evaluated at 17.23%. According to the forecasted data, by the end of 2022, Apple is predicted to rise to $220 and $510 by 2030. Therefore, according to some analysts, Apple is one of the best stocks to buy now. How has Apple performed in recent months? Analysts are optimistic about Apple's future, as its performance in the last quarter beat Wall Street's expectations for the second year in a row, beating both sales and earnings. Apple's revenue increased nearly 9% in the 3 months of March. Apple has been an excellent investment over the past 5 years. That excludes 6 stock splits that saw Apple shares rise from $22 to $178.96 at the close of the market on March 29, 2022. As a result, Apple's share price has increased by 25.3% over the past year. However, the stock's performance year to date has been inconsistent. The price of shares has dropped by more than 17% in the wake of Russia's invasion and fell to $150 on March 14. Since then, investors have changed their outlook. Shares are up 18% in the wake of peace talks and other positive developments. The majority of one-day Apple technical indicator data were biased towards the sell side when writing. The Relative Strength Index, RSI, 33.1, is outside the negative zone. A reading of 30 or less is necessary for an item to be undervalued. The positive factors affecting the Apple stock forecast. Strong Q4 results. Apple Incorporated reported excellent Q4 results. Revenues grew 11% year to $123.9 billion. Additionally, earnings increased 25% to $2.10 per share, beat expectations. Sales of iPhones jumped 9% to $72 billion. The Mac business sales increased by 25%, and Apple's service sector also rose 24%, thanks to paid subscriptions through its app. Apple has 785 million paying members, with 165 million in the last year. Gross margin grew to 43.8%, an increase of 39.8% from Q1 2021. Robust smartphones are in high demand. Smartphone industry was worth more than $270 billion in 2013 and is expected to grow at 7.6% annually. Apple held 17.5% of all smartphones in the world in 2021, compared to 16% in 2020. This figure rose further in the case 5G, in which Apple controls approximately 28% of all phones worldwide. Purchase back of shares and excellent dividends. Apple's free cash flow in the past 4 quarters has exceeded $100 billion. Surprised, it paid out $14 billion in dividends to its shareholders last year. Apple initiates frequent repurchase programs, enhancing shareholder returns by lowering free floating shares. As a result, Apple held 22 billion shares in 2017, and at the end of the fiscal year 2021, 16.86 claims remain. That indicates that every shareholder's ownership share has increased proportionally over the past 5 years. Please keep it simple. Apple isn't launching new products every few years, and the management is sticking to the basics. However, the company has free cash flow, which allows it to reinvest in and develop goods and services that increase its revenues through increased sales. Apple spends a large percentage of its sales on R&D, which was $23 billion last year. We may see a breakthrough device soon. The negative factors affecting the Apple stock forecast. R/VR headsets will not contribute to revenue in the coming years. It is excellent news that Apple has announced R/VR headsets based upon metaverse technology. They are expected to be available in the second half of 2022 and 2023. The real question is whether the headset will be able to contribute to the balance sheet's revenue over the next few years. The watch will cost more than the headgear at $1,000, adversely impacting its sales in the first years. It is expected to make a negligible contribution to revenue, at least until 2026. Headsets will be unable to find a place between AirPods and watches. Wrong local and global cues. Apple Incorporated is a fantastic company with excellent financials. Investors have been focusing on growth equity recently due to concerns about inflation in the US. Many are anticipating a recession, which may, in turn, dampen Apple's demand. Apple stock forecast. Conclusion. Apple's stock forecast is positive mainly because the company invested a lot in research and development to retain their loyal customers. As a result, analysts expect it to increase by 15% in the next 5 years, which will result in profits per share rising from $5.61 up to $35. If the stock trades at 28 times earnings, it could rise to $980 in the next 10 years. So while global indicators might not favor a bullish market right now, long-term investors should not be worried and keep Apple Incorporated on their watch list despite any concerns. Wallet Investor made strong long-term projections for Apple stock, predicting that the share price will approach $305 by April 2025. Like the video? Leave your like, subscribe, and activate the bell, so you don't miss the next videos.